Hey everyone, welcome back to Crypto Cash. Thank you for joining me here today. We're taking another look at Ethereum Classic to kind of see if we can help you find a good entry point and understand, just generally speaking, what's going on right now after the retracement. So if you're new to the channel, we just look at the technical charts. There's no fundamentals here. Always recommend you doing your own research because when you're investing, you need to know both sides. So always know, by looking into the currency that you're investing in, both of the fundamentals and then understand the technicals. So we're covering the technicals here today, and just know I'm not a financial advisor. This is for educational purposes only. Please always do your own research. Furthermore, we have a link to our Telegram community. Go ahead and get engaged in our groups there and just kind of see if you can learn as much as possible. That's the whole idea, right? Is to help you become a better trader. There's also a Patreon account link as well as $25 in Bitcoin from Voyager. Please reference that in your own time. But for now, let's go ahead and get right to the video. All right, folks, let's go ahead and take a look at Ethereum Classic. Now, as per usual, we always look at Bitcoin and Ethereum first, just kind of get a baseline of how the overall market sentiment is trending, just so we can get an understanding of how things are looking right now. So we'll look at that first, and what we do here is always look at the 4-hour chart. So to me, the 4-hour chart is the most impactful because the 50, 100, and 200-day moving averages, which are my favorite, essentially work the strongest on this time frame. So I'll explain what I mean by that. However, at this point, just note that the price right now is looking pretty good shape. We're above support, the previous support and resistance line at about 57,000. That is roughly where the 200-day moving average is hovering. The 50-day moving average, this yellow line here, is coming up and working as a support as well. And when they both swing upwards together, or just essentially cross planes, and that creates a stronger support. So the price does come down in the near future, we likely have a stronger support level that should keep the price above 57,000. Okay, but just know 57,000 is essentially the number that's swaying or tipping the scale, so to speak, in one way or the other. It's had a lot of indecision. It went above, below, above, below, above, below. So it's done a lot of movement in the past week. It's created a unique sentiment overall in the market where people are trying to invest, but they get rejected, invest, reject. So what's cool about this is that with the price trending upwards, there's a strong likelihood of other coins becoming a lot stronger. So hopefully this continues for the next couple of days, and then we can start seeing some green days here. Next up is Ethereum, and this is essentially the 4-hour chart as well. And what's obvious here, as you can see, is the price is shooting up to an all-time high, presently about 36.60. So it's jumping up today, which is no surprise because Bitcoin is stabilizing a little bit more. And when Bitcoin has a tendency of leveling out, people will jump over to Ethereum and start investing because it's the next major altcoin, essentially. The largest altcoin, I guess you could say. It's not the next major, it is the biggest altcoin out there. But it's the next coin next to Bitcoin that people tend to flock to if and when Bitcoin has a state of indecision, which we've seen recently. So that's exactly why we see the price continue to increase. But nonetheless, no matter how you look at that, the 50-day moving average is trending upwards as well. So I'm excited to see how that reacts to the price action eventually. It could continue to work as a support level, but we'll know in the next few days, maybe possibly the next week or so. All right, so that is the 4-hour chart for Ethereum. Let's look at Ethereum Classic now. And what we always do is we look at the 1-day chart, 4-hour chart, 15 minutes, and then 1-minute chart. All right, we'll work our way from top to bottom just so we can get a big perspective on everything, and we know exactly what's going on with every single time frame, because every time frame tells us different stories, right? A 1-day chart is good for specific things, same with the 4-hour and 15-minute. But generally speaking, the 1-day chart, to me, just gives me quick perspective on the overall market sentiment, right? So we look at this here to understand what's going on, what's the general consensus. And if we were to look at the the total price action here, you can obviously see that we had 1, 2, 3, 4, basically 5 super strong green days, right, in a row. Okay, so it's no surprise to see 2 red days following, okay? Now, if you're new to crypto, there's a common trend that happens. There's a big old hype train. Everything just jumps straight up to the moon, some people would say, and then the price comes crashing down, usually to meet that halfway point, or in a lot of cases, just it finds its true range at that point. In other words, the average price should be likely closer to where it's at right now than up here at 170, 180, because of the simple fact that, I mean, shoot, it was $40, $50 right here in this range for, a week and a half, 2 weeks. Okay. So that being said, one-day chart helps us understand the big picture, and looking down below, we can identify, obviously, the RSI is extremely overbought. So until this calms down, I wouldn't feel comfortable investing. Again, just based on the outside looking in, we'll look at the smaller time frames to identify a good entry point. But I can tell you with RSI being this high, it's just a little concerning, because anytime it comes that high, it has to come back down eventually. It's rare for the RSI to stay overextended for this long. So we actually got kind of lucky to get 5 full days. I was expecting it to stop right around $70, $80. So, I guess some of us got lucky. Unfortunately, some invested too high. That's the reason why I'm making this video too, to kind of give you a little bit of clarification on what's going on with the charts, because unfortunately I have some community members that invested at 160, 170 range, and that's not terrible. I don't feel like you're in dire straits right now, but just know that the price action the way it is, it makes sense. It has to come back down, okay? But the RSI is basically telling us that the price is overbought. That's what you see right there. The MACD also is swinging upwards. It is losing momentum, so basically just means that we're shifting towards bearish momentum, or bearish sentiment essentially. So just keep that in mind. That's the overall gist of things right now, is the fact that we're losing momentum. Now here's a good sign, and something I like to look at the one-day chart for. As we can see, all this volume, all this green bar volume up here, there's less red bar volume here today than there was yesterday. So that's a good sign. It basically means there's a state of indecision. People are not willing to invest, but also they're not selling off as much either. So that could be a very good sign overall. Again, we'll look at smaller time frames, but I think we're not in terrible shape, all things considered. I do feel like the price action right now, based on where it's at, is pretty normal, pretty affordable, pretty much the way that it should be, hadn't it jumped up so fast so quickly. Okay. 4-hour chart, taking a look at this. One thing to note, which is excellent, the RSI is under 70 finally. So we're just kind of cruising. It's in this, I guess you could say consolidation state, where the past, 24 hours, we've seen the price just hover in this range here. So it's creating its own channel, and it's working its way down. We'll see kind of what that looks like here soon, but another thing to note as well is the MACD is trending down. Of course, big surprise, bearish territory essentially. So the overall sentiment is that it is extremely bearish right now, but doesn't mean that it will necessarily go any lower, because if we can look at some support and resistance lines and kind of see where it's trending, then we'll have a better understanding of what that looks like. Okay, so not terrible news here. Trust me, it's not that bad. Just note that the moving averages are a ways off from working as support lines for now. So what I'd venture to guess here is that in the next week, maybe just say 3 to 4 days, depending on if the price action stays similar to where it's at, the 50-day moving average will come up and likely work as a support level. At least that's the hope. A lot of times it does that in these situations. We just got to be patient. So, generally with what I see right now, I wouldn't recommend taking entry, but I do see a pretty strong support line right there that I've drawn previously that could continue to work as a support, but we'll see what that looks like here in a moment. But I don't know. I don't dislike everything I see here. It's pretty normal, pretty standard for what happened previously. So here's where it's going to get interesting, the 15-minute chart. See if I can get this out a little bit further. So also one thing to note too, and I teach this in all of my videos, is to pay attention to the RSI on the 15-minute chart. If it goes over 70, it might be a consideration to start trimming or selling your profits. If you have a position, of course, or wait to take entry, because there's likely a retracement that'll happen after. The inverse also applies when the RSI is under 30. If it's too low, then it's considered oversold, and it might be a consideration to take entry as long as you haven't passed a support level. So looking at this here, just to quickly note, let's just pay attention to this. If you see the RSI from, what was it? I think it was 2 days ago, right? 2 or 3? Okay, yes, so on the 6th, essentially. So in Pacific Standard Time on the 6th, at approximately 6 a.m., the RSI was way too high. So it got up right here, and since it had such bullish momentum, it just straight consolidated for a few hours. And then afterwards, it ramped up again to hit like its current all-time high at the time, 146. What do you see here? Big surprise, RSI is extremely overbought, right? It's over 70. So we saw a retracement occur. Now that may not look like a large retracement, but that was actually pretty big. It's just that seeing all the numbers, it essentially it makes it look smaller than it is. That was a 16-17% retracement. So the price came back down from, what is it, right around 82 RSI to just kind of duck under 70, right at like 65. And then of course it ramped back up again for its last bull run to hit its all-time high of roughly $180. But look at this retracement that occurred here. Big surprise, RSI is over 70, retracement occurred, and let's see what that percent is. We're looking at a retracement of 33%, so that's even larger. Okay, so as you can tell, the bigger it comes up, the bigger it falls, right? So if you ever have an entry, just say for example you have an entry point leading into this, and you're happy with your entry of $140, it jumps up to somewhere in the range of 160, 170, and the RSI is peaking over 70. It's just saying like this 80 range. You might want to consider selling your position, or at least selling part of your position to ensure you take some profit while you still can, because it'll come back down again. All right. So I just like to kind of help you understand that and help you see that, because that is a big deal in my opinion, because it has, when you see that kind of difference, it's a big deal. It's something you need to act on, unless you're just, again, planning to hold Ethereum Classic forever. That's fine too if you are. But maybe just consider adding to your position after it retraces instead of before it does, right? Don't jump on the hype train. Be careful, be cautious, be smart. Okay? You got to be calculated in this industry. And, it'll help save you some money in the big picture, instead of having to hold on for it to come back months later and you have no opportunities to invest your money in anything else in the meantime, right? That's why I always recommend you never go all in unless you know for a fact you're going to hold on to this for 365 days or longer, right? Anyways, enough about that. That is essentially what I wanted to preface and specify on the RSI. So what's cool, and if you see this here, the inverse is kind of applying, right? So look at the RSI is under 30 right here. It peaks out, or bottoms out, I guess you could say, at about 28. Okay. Now there's a continued retracement here, and that's because you don't chase the bottom, right? It didn't find its bottom yet, so it's continuing down. So again, when the price comes down below 30, it doesn't mean you just take entry, right? It means that you pay attention to other indicators and understand what's going on first, and then consider entry because it's a better position. It's considered oversold, right? So essentially it tells us that it's a good value to buy it at that price based on the overall, the last X amount of hours in trading. But that being said, that wasn't a good entry point, right? But if you look at this here, just for example, this peaked down below, it hit 108 as its low. And I do this support line here recently because I noticed that it had tested this support a couple times previously. And then again and again, and appears that in the last 12 hours, it also bounced off of this support level at about 110.50, just say rough estimate 111. So at roughly 111, we have this very strong support line forming. And the reason why is because it's been tested 1, 2, 3, 4, 5, 6 times, and then again 7, 8 recently. Okay, so that being said, that's obviously where the average true range is trending. So if the price is kind of going to that point, then we need to understand that that is essentially what everyone feels a good value is for the price, right? But to further the example of the RSI, if you see the price coming down here and then it recovering and testing again and coming back up, every time the price goes under 30, it recovers and comes up, right? So it's kind of the inverse of taking money off the top. You could likely add to your position average down when it gets to that lower point if you'd like. Now I prefer you to wait because here's the thing with this scenario. It is working itself into a downward wedge, and oftentimes, more often than not, when the wedge pattern is trending downwards, there's likely a breakout that will occur, right? Because you have a consolidation period, state of indecision, and then the price either increases or decreases. But more often than not, probably like I would just say if there's a percent to include here, 60% of the time it will go below that line. It will break that support and become a resistance. Okay, and let me explain what I mean by that after I mark this here. So I'll just put that there. So this isn't perfect. So again, this wedge pattern isn't an exact science, right? It's coming close, but generally speaking, it's working itself into a channel right now. So let's just say, for example, the price comes down, excuse me, the price comes down to 111 again, right? So if you're not familiar with this, let me clarify something about support and resistance lines. If a support level is tested multiple times, right, the more often it's tested, the more likely it's to break. Okay, so with this support level, even though it's been helpful and it's held the price above this line of 111, it's tested 1, 2, 3, 4, 5, 6, 7, 8, 9, now 10 times. Okay, so the likelihood of that being broken is extremely high. So if it comes back down and tests that support level again, just say 1 or 2 more times, it will likely break below. And what happens is when a support level is tested more times, like just say a support level, for example, is tested 20 times versus 10. If it's tested 20 times, it'll have 20 times the more resistance once it becomes a resistance, right? So it's going to be super strong the more times it's tested. So in this case, it's been tested 10 times. So it's more likely than not going to become a very strong resistance line when the price breaks below. So just be mindful of that. And that's why we want to wait for confirmation. And in this scenario, we want to see how the price reacts to A, this wedge pattern forming, which isn't 100% reliable, but B, more likely than not, if the price comes back down and tests this line, I would not be surprised if the price breaks below and stays below. Okay, so just something to be aware of. So just be careful with your entry point. So I guess at this point, I'm not telling you really to take entry, even though it does appear to be a good value and the price could very well come back up. Me as a conservative trader, I'd much rather wait for the price to come down and drop below that to get, either a more affordable price. So maybe to consider this, wait for the price to come back up if you're in a position that's higher than the price average right now. And wait for the price to come back up so you can essentially get back to your goal, right? However, if the price comes back down, try not to be super frustrated, because you could always add to your position and average your price down. And that's essentially dollar cost averaging. It's something that's better to do in situations like these, so you can have the opportunity to get a better value and an overall better price. That's another reason why you do not go all in. If you have already, I'm sorry, that's unfortunate. That's why you don't go all in with everything you've got, because of the fact that you don't have an opportunity to average your price down if it reverses on you and doesn't recover. Okay. So again, I'll continue to try to reiterate this in future videos. I'm working on some training videos to help make this very simple for you. So we'll be on the lookout for that, and also be sure to reference my Patreon account so you can have direct access. We can kind of communicate further with some Q&A. But honestly, right now, the way things are with Ethereum Classic, I don't love what I see right now. I like the fact that there's a nice strong support level, but I feel like that could be broken at any time, and it would become likely a very major resistance line soon. So just something to be mindful of. So I'm not recommending taking entry at this point. Heaven forbid the price goes up and we miss out on an opportunity. That can happen. But it just feels like the price may not progress upwards at this time frame. But we'll see what happens honestly in the next 24 to 48 hours, because we'll see a breakout either up or down soon, because the price can only consolidate for so long. And it's going to be interesting to see what happens. And also too, with Bitcoin kind of recovering, being on an upward trend, we can expect that to be kind of what's going on here. So that being said, thank you so much for watching. I really appreciate you staying tuned for this so long as well. And we'll keep a close eye on Ethereum Classic over the next few days. So best of luck, and I hope that you have a great rest of your day. We'll see you again soon. Take care.